Hello traders, and welcome to this week's technical analysis outlook. It's Monday, July 31st, the last trading day of July, and the week ahead could keep investors busy as regards central bank meetings. The Reserve Bank of Australia and the Bank of England will announce their rate decision on Tuesday and Thursday respectively, while on Friday all the attention will turn to the US non-farm payrolls report. So Aussie dollar, pound dollar, and dollar yen will be closely watched this week. So starting first with Aussie dollar and the Reserve Bank of Australia. The Reserve Bank of Australia is expected to deliver a 25 basis point rate increase, but futures markets are providing a 70% probability for no change in interest rates. So that divergence in forecast could make Aussie dollar volatile on Tuesday. Chinese PMI figures are also due on the same day, so it could be an interesting day for Aussie dollar. We can see that the pair is currently testing the 0.67 round level. This is where the 50-day moving average meets this broken support trend line. While not far above that, the 20 and 200-day moving averages at 0.6735 could be another obstacle before the pair heads towards this key resistance trend line from April 2022 at 0.6820. We need to overcome that line over here in order to re-challenge the tough 0.69 resistance territory where the price peaked twice during the previous sessions. And then if the pair manages to attract fresh buying here, it could run as high as 0.6970, where this tough resistance line is located. Well, from a technical perspective, the bias is still weak. The RSI and the stochastic oscillator are not in the bullish territory yet, so that increases the odds for a downside correction, in which case the price could retest this dashed tentative support trend line around 0.6635 before it heads towards the 0.6565 and 0.6595 key constraining zone. Another failure here could then trigger sharper decline, probably towards 0.6455 and 0.6485, where the price bottomed out back in at the end of May. And not far below that, the 2020 support trend line at 0.6420 could be another interesting area to watch. Now turning to pound dollar and the Bank of England's rate decision. The central bank is expected to raise interest rates, so that seems to be a done deal this week. But how big that rate increase will be, that's still questionable. Investors are between a 50 basis point and a 25 basis point rate increase, with futures markets providing a 60% probability for a 25 basis point rate hike. It could be another challenging session for the Bank of England. Perhaps weaker than expected PMI figures could increase the odds for a smaller 25 basis point rate hike, in which case pound dollar could reverse lower to test the 1.28 support region where the price rebounded on Friday. Not far below that, the 50-day moving average and this support trend line at 1.27 could be another ideal place for a pivot. Any break below that would put that option over here into question, likely activating fresh selling towards the 1.2590 region where the price bounced up back in June. And then if this fails to halt, we may see a sharp decline towards the 1.24 round level. Now looking for resistance levels, while the 1.2895 and 1.2950 region will be closely watched, since the 20-day moving average and this ascending line from the end of 2022 are all located here. Then not far above that, the 1.30 psychological mark, which coincides with the 61.8% Fibonacci retracement of this downtrend over here, could be also could appear another tough obstacle along with this shorter term ascending line at 1.3025. I would like to see a clear close above that area in order to target the 15-month high 1.3141. And then if bullish pressures strengthen from here, the next the spotlight will turn to this ascending line over here at 1.33. And finally, turning to dollar yen, and the U.S. non-farm payrolls report, the data are expected to show jobs growth of 200,000. That's slightly weaker than 200,009 registered back in June. But overall, if the data show a surprisingly resilient economy, resilient labor market, and wage growth remain elevated, that could help dollar yen to extend Friday's recovery above 142. The 143 number could cause some stability here before the pair reaches the 144 and 145 tough resistance zone where this uptrend peaked. And then if the rally continues from here, the next obstacle could be the 146 level, where the price faced some consolidation at the end of 2022. However, if upside persists, then a stronger obstacle could emerge somewhere between 147 and 147.26, where these two ascending lines are located. This is also where the price faced strong resistance back in 1998. From a technical perspective, the RSI, the MACD, and the stochastic oscillator are pointing upwards, so there is a risk for more upside. So that could be the case if the price manages to stay above the 20-day moving average at 140.88 and more importantly above 142. Otherwise, if the price slips below its 20-day moving average, then the price could retest this ascending line around 139.35. Perhaps a stronger decline could see some consolidation again near 138, while a steeper decline could drive the price towards the 200-day moving average at 136.60 and this falling line at 135.80. So that's all for this week's technical analysis outlook. Hope you have a great week and see you next time. Bye bye.